Good morning. It's Wednesday, March 26th. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So two topics to discuss here. Gold at 3,000 now, is 3,500 next, and what's the implication of copper tariffs? So let's begin with copper. So overnight, Bloomberg, they reported that U.S. tariffs on copper imports could be imposed within several weeks. That's earlier than the 270-day deadline. So copper prices have risen to another record, 537.40 if you look at the futures contract, the high overnight when that news came out. The news came out, it was locked in red on Bloomberg, on all the television, the financial news networks, and that's where we saw that big move up higher on that copper market. So analysts are expecting a 25% tariff imposed on all copper imports by the end of the year. Now copper, looking at the price action again overnight, up about 1.3%. So that's a 15-cent range. So if you start looking at different contract sizes, the nice thing about copper is there's a micro, a mini, and a full-size contract. Everything from every penny move being $25, $125, or $250 per penny move. So to learn more about the mechanics of the contracts, you could reach out to our sales team if you like to add that particular product here or start speculating in the copper market. Our sales team's number, 312-278-0500. So looking at the reaction in the U.S. equities, because equities under a little bit of pressure, any kind of tariff news that comes out really kind of drives the flows in the U.S. equities. So we saw this news came out in the early evening, so global stocks, they slipped. So investors are really waiting some clarity on the U.S. tariff plans and then the economic outlook before President Trump's April 2nd deadline. So I anticipate to see kind of a lot of liquidation, a lot of positioning coming into that particular deadline. So the tariffs, the issue still remains the main concern for investors with the uncertainty surrounding the scope and the impact of the tariffs. So the health of the economy is also a big concern, with many analysts fearing a slowdown. That's also fueling some of the driving into hard assets here, driving into the gold market, with growth concerns in U.S. data showing consumer confidence hitting a 4-year low. So getting back to the basics here, looking at the strongest markets based on technical strength and looking at year-to-date performance. Now there's only one as far as based on technical strength, and that's the copper market, up about 28% year-to-date. Now, how do I determine, I get a lot of these questions, how do I determine what is the best contracts or what are the best commodities based on technical strength? Well, I take a combination. I've weighted short, medium, and long-term indicators and examples, because you could create your own kind of bellwether matrix as far as gauging some of these commodities. I've done this for about 25 years, so I've programmed a lot of different systems, a lot of things with Excel that plugs into the CQG platform. So an example of a short-term indicator could be like a 7-day directional indicator. A medium term could be something like a parabolic stop and reversal, or a long term could be something as simple as, say, a golden cross or a 50-day crossing over a 100-day moving average. Just simple things that you want to weight. What do they mean to the particular trend, the direction, and the contracts? Now, many of you have registered for the chart pack, and that's very simple. It has none of those fancy bells and whistles. It is just merely drawing out long-term trend lines and looking at different things that logically look like will be support and resistance. So looking at the performance leaders, this is also something I do on a daily basis. While your best performing commodity, you guessed it, up 2.3% yesterday, was the copper market. Now, interesting to note was that silver followed suit, up about 2.2%. Now, sugar, that was one that broke out too, moving back to the upside here. A lot of people speculating in the sugar market as well. Quick story, one of the first commodities when I got involved with the commodity markets that I saw someone make $1 million. Guy's name was Ralph Lang. He was a pilot in a couple of the wars and everything. He passed away, so he wouldn't mind me using his name. Guy bought 100, he opened up an account with 100 grand, bought 100 sugar contracts, went up 8 handles. Guy made $1 million, took the money out. It's the fastest I've ever seen someone make $1 million. Not a recommendation, just a quick story and historical story on some of the experiences I've had here. So natural gas, your worst performer, down 1.8%. Again, when we get to the summer months, you're going to see less of those drawdowns, more of the injections going into natural gas inventories here. Had a topping chart pattern kind of breaking down a little bit more. And then wheat and corn, those were two of your worst performers. So if you look at the grades, they kind of had this dead cat bounce and are starting to roll over here just a bit. Now looking at the overnight price action in metals, gold, silver, bit of a muted response here. Gold up about $3 at 30.29. High of the overnight session 30.36, low 30.17. A lot of people rolling over from April to the June contract. Sometimes when you get that rollover occurring, prices are getting an equal weight of people taking positions off, adding positions on, and you get less volatility in the market leading up to those. So the pivot point is going to be 30.28, trading right about there right now here. And then if we break below that, it's going to be 30.10 down to about 3,000 is where that main support is. So interesting to see if prices continue to hold this 3,000 mark. And I believe that prices long term are going to hit things like $3,500. And I'll get into that here in a minute. On the silver market, the pivot's really 33.99, trading 34.26 last night. So looking at some things here. So I discussed $3,500 gold, and it's really going to come down to you need to see that continuous uptick in central bank demand. You need to see China continue to add that and promote that particular product. Now, when gold was at all-time highs about a week ago, they came out with a hit piece on gold in their particular newspaper saying that traders should avoid excess speculation in the gold market. What I think they were doing was trying to bring prices down so they could add to their central banks. And then also the insurers, they don't want them allocating 1% of their capital to the gold market at those record highs. So I think that that's another thing we want to look at here is when prices come down, how does China react? Now, something else, I always hear people discussing, hey, GameStop just added Bitcoin reserve. Why not add some gold reserve to there too? So if you get some corporate investments into some of the silver, some of the gold, some of the metals, in addition to things like Bitcoin, that might help boost prices up here. Also, the retail investor, they are starting to increase some allocations here because of the Trump uncertainty. And I'll get into the ETF flows in a minute. Remember, when the Fed was raising rates, cutting rates, we were monitoring FOMC data here. What was the Fed watch tool, the probabilities and things like that. Now we're looking at ETF flows and how people in the individual retail investor is perceiving the metals markets. Other things we want to watch, US dollar weakness, our foreign central banks selling, and increased debt. So geopolitical tensions, our individual countries adding to the gold market. We always monitor central bank reserves and those increased allocations. And then is China selling treasuries and buying gold? So the benefits of gold. It is an inflation hedge, but you realistically want to buy the thing that's causing the inflation. That's why we discuss live cattle, crude oil, gasoline, eggs, things like that. That's the inflation. That's what drives the inflation. It's better to own that product than something that slightly benefits from it from the gold market in my stance. These are just more strategy discussion that I have in my own head. And then gold tends to perform well during crisis. And also it does act as a portfolio hedge. So as more retail investors adapt to these different things, that's what I think that boosts that gold market. Now getting back to it in the ETF inflows here, exchange traded funds added 16,250,000 troy ounces of gold holdings in the last trading session, brings this year's net purchase up to just under 5 million ounces. Now here's where it gets interesting. 11 straight day of growth, longest winning streak since March 28, 2022. You go to the ETF flows, and this is on silver. Now, silver 48 hours ago looked like a complete dog. Ran into $35 twice, started to roll over. I sent out on a chart pack a trend line that was in the middle, kind of a pullback from the support and resistance, and it bounced off there, and now you can connect the speed line. So I'll send that out in the chart pack, and that's kind of where your inflection point remains in your support level. So ETFs added 13.7 million ounces of silver to their holdings in the last trading session. This year's net purchases 10 million. Biggest one-day increase since July 23rd, 2024. So year-to-date percentage change. Gold up 6%. That's the highest year-to-date that we've been recording. And silver up 1.4%. That's the first positive recording that I've had all year. And you look at the gold-silver ratio. Where was it at yesterday? 80.5, 90 to 1. Now it's at 88 to 1. So it tells you people going a little bit more into that silver market, kind of getting some legs pushing up. And we're looking at the charts. We do have some identifiable levels where for risk management purposes may be willing to, take some chips off the table, kind of cut the position down, or look to add to position. So reach out to me for strategies and things like that. Today's key events, we're going to have durable goods orders. We got our unemployment claims coming out tomorrow, GDP, core PCE. That's on Friday. So the way that I'm going to attack the markets is I'm going to stay a little light coming into things like Friday's PCE data, and then also, again, stay a little light right around that April 2nd reading. So that U.S. personal consumption expenditures data due out on Friday, that's the Fed's preferred inflation measure, and that'll give you some hints as far as the next policy moves coming up here. So a lot to talk about. Kind of got a little bit off topic on this one, talking about the copper, the gold, how I come up with a few different things here, but it's all about the process. It's all about reviewing things. It's all about keeping a notebook here too with things. I keep a notebook with a lot of different sayings. I highlight things, I dog ear things. When I hear things interesting, like, when I read topics about the psychology of the market correction, it sound like 2 weeks ago when the equity markets went from 6150 down to about 5500, fastest correction in 8 days. A lot of people were on edge. It was incredible the way that the sentiment and the investors' mentality changed so quickly. Now equity's snapping back about 50% of that sell-off here, and it's crickets back out there again. So I think traders are just waiting to see what's going to happen with April 2nd. But remember, keep the mental game sharp when it comes to trading here. The mental capital is oftentimes worth more than the capital that's in your accounts. So I'll leave it at that. You got any questions, reach out to us. Again, sales line 312-78-278-0500. I'm still sick. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Go get them. Good trading.